we've seen a bit of a pullback in the markets and really seeming to be spurred on by that US data that came out yesterday afternoon.
Yes, the market very spooked and very disappointed by that. We saw that the ISM non-manufacturing data came down to less than the critical 50 level and was reported at 48.7. And you know, it is 50 is the magical number because it will tell us whether non-manufacturing is in a growth phase or not. So you know, the market not liking that, and then the market being spooked a little bit like that. Also, jobless claims were better than expected though yesterday at the United States by 5%. However, you know, when the chain store sales, I think it was, came out, you know, that also showed lots of weakness in the market, a contraction of 0.3 versus last month, which was 2.1%, somewhere there.
So, of course, we are still getting some very mixed data out globally and really putting a question mark over the extent and the rate of the global economic recovery at this stage.
Yes, yeah, I think, you know, people being cautiously optimistic, but a lot of the fundamental data, the economic data, just pulling things back and saying, you know, things are not going as smoothly as previously thought. And, you know, we're seeing a lot of profit taking. Today we've seen, you know, the commodities pull back also quite a bit. And I think what the whole world and the entire global market is waiting for is the jobless, the non-farm payroll numbers coming out later on today in the States, as well as the unemployment rate. So I think we're just all waiting to see there, and we see the effects of that in the currencies as well as our stock markets.
And of course, the market is looking for a number of about 130,000 job losses last month, better than the 190,000 job losses we saw in October, and keeping the unemployment rate around 10.2%. So anything worse than that, do you think we could see another pullback in equity markets?
Yeah, surely. You know, I saw the consensus forecast on Bloomberg's was about minus 125,000 for the non-farm payroll, and also expecting just unemployment to stay at this 26-year high of 10.2%, I think it is. And you know, so the whole market waiting to see what happens there, and using that data right now to position themselves and to see whether the United States would lead us higher on this Friday or you know, lower based on the data that has come out earlier this week, which has been disappointing, and what's going to happen today.
Well, of course, here at home we had President Jacob Zuma yesterday and the Economic Crisis Task Team outlining measures they've been taking. And of course, we do know we've lost close to 1 million jobs in South Africa since the recession started, though there have been some measures being put in place. I think the Public Works Minister, Jeff Deutsch, outlined some of the alleviation they might have provided to the South African economy and job market.
Yes, I'm expecting, they said that they will be creating about 500,000 jobs by the end of this year. And that's in line with what President Jacob Zuma said earlier on in the year. So, you know, we'll see whether that pans out. But, you know, a very big warning coming out of Jacob Zuma yesterday, saying that, you know, it's not smooth sailing just yet. You know, there will be further contractions and a lot more job losses happening towards next year, regardless of the fact that we're out of a recession. But, you know, so a mixed bag there. You know, some good news for some people that 500,000 jobs will be created, but, you know, a stern warning saying that going forward it's not necessarily going to be maintained.
And of course, we saw that reflected in our own PMI data that came out earlier this week, that although the PMI had improved above the 50 level for the first time in almost 2 years, we still saw a contraction in employment and the employment figures in that thing. Though we had business confidence out yesterday and a more positive reading on the business confidence index in South Africa.
Yes, a much better showing there. You know, they were up to 84.1 versus 82.2, I believe, in October. And, you know, we saw confidence increasing in imports, in commodities, in share prices, in manufacturing and vehicle sales. So, you know, business confidence levels increasing there. You know, perhaps you know, adding to the sentiment that, you know, we may that the recession is helping us along and that things may be improving. So, you know, we'll see next time what people are thinking and whether, you know, this can actually be sustained.
Of course, there's been a lot of focus on the gold price hitting these new all-time highs almost every day. Yesterday, $1,226 an ounce, pulling back slightly today. Of course, yesterday we also had the platinum price trading at $1,500 an ounce, so also good for our platinum producers.
Yeah, I think platinum hasn't had much press lately. I think people have been focusing more on this very, very strong gold showing that we've seen lately. But, Wednesday we saw, above 1,500, for the platinum price year to date. But, it's still very, very far cry and very, very below the 2,250 somewhat level that we saw in March 2008. So, platinum has still got much more growth potential there, and I think investors will start to turn towards other commodities besides gold to see where the potential investments and potential growth exists.
Well, of course, unlike gold, platinum actually has some use, industrial use, also jewellery like gold, but industrial use, and as we see the economic recovery gathering traction, that should be supportive of the platinum price going forward.
Yes, it should be supportive, specifically for us looking at vehicles and vehicle manufacturing and vehicle sales. We will see that translated into the platinum price. I mean, we can also speak about oil and say, oil has been hovering around the $75, $79 per barrel level, and, has been very shy to go beyond $80. And, just really a reflection that both those ones, rely on vehicles and vehicle sales, and also rely very much on consumers and where consumers are sitting at the moment, whether there is demand there, whether the consumer feels that they can go back into those kind of industries such as vehicle sales and boost that kind of that side of the market. So it's still a bit sensitive at the moment. There's still not much direction happening there, but and that is really because of the consumer aspect of it. And but we'll should wait and see. I think the first thing we'll wait to see is whether oil goes above $80 a barrel, and then hopefully that will filter on to platinum, reaching its potential.
And of course, we saw that oil price reflected in Sasol's trading update yesterday. It's expecting a 45% fall in first half headline earnings a share, and really it says due to the weaker oil price compared to last year, and of course the stronger rand, and the rand is something that everybody has to start factoring in, isn't it?
Well, we must also remember that oil has got inflationary pressures. It is important to imported inflation, and so it also is something that we need to be very concerned about. Should it shoot up very quickly or whatever, it will add to inflationary pressures in South Africa, and so. It is important that we have a look at that, but also it also shows the confidence of the United States consumer, who is the biggest consumer of oil at the moment, and to show that they're standing, whether the United States consumer is coming back to the market, and whether the recovery is becoming a little bit more protracted now and a little bit more sustainable.